Hello and welcome to Spy Money. Today I'm going to talk about a problem that I have. It's one of the easiest things to follow, but when you're in the trade, it's hard because of FOMO, fear of missing out. And I use the 70-30 rule. The 70-30 rule sounds complicated, but it's really not. And this is a perfect example. Last Thursday, this was gold slash GC. This is a perfect run that you would have, and you're really better off to do the 70-30 and get the meat of the trade other than trying to hold in. So what I do is I fib it out, and if I'm scalping, I'll do a 15-minute fib, and I'll usually do like either a 1 minute or a 5 minute time frame. This one's on a 5 minute time frame, and it's on a 5 minute time frame because it's easier to see. On this one, typically you would come down here. When you see this popping up, you would want to get in right there. So let's zoom this in. When it's coming up, your 15's above the 50, you'd want to get in. But the problem is you have a fib right here. So you're better off not to get in, because if it hits that fib, yes, it might keep going and it might even rock it and you miss the trade, but oh well. You want to wait till it gets over this fib. So it hit it and it come down, it hit it again, it come down. So if you would have got in right here, then you would have probably stopped out right on through here and you would have lost money right here. So you're better off to wait. So this come down, then it come up, and here we are, we're getting over the 15 again. The 15's over the 50, but we still got that fib there. So instead of getting in there, yes, it broke through and it come down, and it broke through again, it come through, broke through again. And then, finally, you are a open and closed candle above the 15. So typically that would be a good place to get in, and, because it's pretty safe that you're above the fib. But let's just say you wait just a little bit longer. I mean, you don't know that these candles are going to do what they are. But, if this one gets in, I mean, even if you did get in on, say, this candle here, you're still probably safe because you're above the fib. Okay? So if you do that and get in right there, and then as it comes up, when it comes up and comes down, you're still in the money here because you're going to buy. Let's see, we move this down. Let's just say you bought right at the top of that fib. You're still in the money, so you could afford to allow this a little wiggle room to get up through there. Because sometimes it takes a little longer for a trade to take place. So you keep on going, and it's going, and it's going, and you're fine with it, and you come up, you get close to the fib, and it pops down, but you're okay because you're still way in the money, so you can afford to have a little wiggle. And then when it comes down and it comes up and touches that fib, that's your sell point. You ought to sell right there. The reason you should sell is because it may not ever touch that spot again. It may just sell off right there. A lot of times when you hit a fib, it will sell off. So when it comes up and it touches that fib, just get rid of it. You're possibly going to lose some potential profit if it skyrockets, and you know what, you're going to hate yourself for it. But you know what, if it drops right here, you're going to be so, man, I'm glad I sold that. More often than not, when it hits this fib, especially this much of a space between the fibs, usually it will pull back and probably come down to here, which you can get back in. So what I figure is the 70-30 rule. The 30 is coming up to here, and then when it comes up and starts getting close, you could actually sell, on these little spikes right here. You don't have to wait till it hits the fib because it may not hit the fib. So if you try to get out ahead of time, you're probably okay. Even this one right here, if you were to come up and it went up, you could have sold right through here. So you're still, 30% here, 30% up here. So you got 30 to 70. So if you sold right here and you bought in, really where you should have bought was right there. That is the better entry for safety. And we're talking about conservative trading. So you've got a percentage here and a percentage here. It's not exactly 30%. It's not exactly 30 there. But it's the 30-70 to give you an idea that when this goes up, you want to try to look at the difference between this fib and that fib and try to get in, just above to where you feel comfortable with it. You're going to miss out on this potential profit here, but you're also not going to have to worry about getting in a bad trade where it's going to sell off. So if you just wait a little bit there, and then when it comes up, honestly, this one right here, when it spiked up, you should have been selling right up in here. And this one, you could have easily sold right there. So this particular one is probably like a 90-10 rule is what it would be, the percentage wise. But so you would be making roughly 80% of the trade. So 80% of a trend, an uptrend or a downtrend, is actually really good money. You don't have to have the 0 and you don't have to have the 100. You just want it in between to where you feel comfortable as far as getting in and out of a trade and not have to worry about if you're going to lose money. Now on this one right here, if you had sold right there and it pulled back, and you'd be thinking, oh man, I'm glad I sold up there. And then it kind of come up, and then it kind of went like this. And then once the 15 was back over your 50, which is right here, and then you've got your 15 kind of coming up, then you could always get back in. Once these candles get back on top of that 15 and go, then you'd be fine. So you could have went ahead and went up, and then whenever it started going up, and when it come up, you can be selling on this candle. Again, it pulled back, and then when it come up and it bounced through, don't get in. You're underneath it, don't get in. It's starting to spike up, don't get in. Get in on the second candle. So when you get on the second candle, you're above your fib. You're losing, if you'd have stayed in the trade, yes, you would have made money. And you possibly might have made more than if you just scalped through here. The problem with it is this right here may have just kept selling off, and then you would have missed out on a lot. So you're better off to go ahead and just, play your fibs and play your 15 and stuff, and then do it that way. So that's my idea of the 70-30. And if you do it that way, I think you'll have a lot better statistics as far as winning trades and so forth. And you would also make more money in the long run, even though you're not getting 0 to 10, 100, but you're getting 20-30% to 70-80%. So doing that, you're getting the meat of the trade, and the meat of the trade consistently is a lot better than hoping that you got in right and hoping that you sold right. You just end up losing money when you try to play 0 to 100. So I hope this actually helps you. It is one of my biggest pitfalls that happens to me, because I'm like the rest of you. I want the whole trade. I don't want a portion of it. I want the whole thing. I want to say that, I made $1,000 on that trade or whatever. Everybody wants the bragging rights of it. Not that you're bragging about the money, but it's just bragging about your entry and your exit. And, you want to say, oh, I got in at the bottom on that. And everybody's like, man, you go, man, and stuff like that. So if you just play the 70-30 rule, it's conservative trading. Your end result is going to be a bigger bank account at the end of the year. So I hope this helps you. We have a Discord group that we go over all the stuff, and we do live trading to kind of help show how that we actually trade these lines and the fibs and so forth. And we have a lot of discussion in the groups. We're sharing each other's trades as far as what someone got into. We're sharing charts. We're making each other better traders by doing this. So down at the bottom there is a link that you can click on, and it'll invite you to the Facebook group. When you're on the Facebook group, there's a sign up page there, and you can just click on that and it will automatically put you in our Discord group with payment. So do that, and please like, share, and subscribe, and we'll see you on the next video. Thank you.